These videos and accompanying PDF package have been prepared by Patricia Malia. Personal use of these items is welcome. However, any use of these videos and package for commercial or monetary gain is not permitted without express consent from the author.
This statement is called the Statement of Comprehensive Income, or for private companies, the income statement. If you can think of somebody owning a house, the balance sheet tells us that they own a $300,000 house at the end of December. What the income statement tells us is how much rent and what the expenses were for that house, in this case for the year ended December 31st, 2014. During the year ended, our company, XYZ, had total comprehensive income of $59,500. This is the extra amount that they made from doing business for the year. With this extra amount, the company has a choice. They can either keep it in the company and make more money with it, help purchase another house, or give it to their shareholders in the form of a dividend. This statement is a multi-step income statement. It is multi-step because it includes a subtotal for gross profit. A single-step income statement just simply lists revenues with all of the expenses and then gains and losses directly below it, with no gross profit subtotal in between. The company will list all of its revenue with a gross profit subtotal, then its remaining expenses for its operations, coming up with a profit before tax. This is the amount that the company makes in their ordinary course of business. Next, the company will calculate their income tax expense to give them their profit for the year. This is the operating profit less income tax expenses. Afterwards, any other gains or losses or anything else that they don't ordinarily do, such as in this case, a loss on an available for sale asset or a strange type of investment, is deducted or added to come up with total comprehensive income for the year. For publicly traded companies, and these are companies who have their shares available for the public to purchase, must tell the public how many shares have been purchased by investors. In this case, the number is 20,000 for the year ended 2014. The other thing they must do is a calculation of the earnings per share. And earnings per share is the amount of profit for the year under the ordinary course of business divided by the number of shares gives us each person with a share making $3.075. We're going to do this calculation more formally later on. For calculation purposes later on, I've also included the market price of the share on December 31st. This is not included on the Statement of Comprehensive Income, but for our calculations only.